savvy. We can help you skip those valleys. Let's rally, yeah. If you want to be crypto savvy, we can let
Welcome back to Be Crypto Savvy. We are going to jump into Bitcoin here this Saturday afternoon. I want to focus on Bitcoin today because I believe really the whole crypto market in general is going to be looking pretty darn similar here for a while. And I don't think it's good. I don't think it's going to be pretty. I think it could end up being pretty bearish. But anyhow, let's just jump into the video and stop wasting time. You can see we are currently on the daily time frame and are currently trading at $27,732 at the time of recording. Our last video, we talked about this pullback and expected to drop down into this temporary green box I positioned here. And I did say that it could end up coming down possibly just a touch farther to this 50-day moving average, which is this green line here, which actually did end up happening. So I'm actually just going to get rid of this green box here. This was just a temporary one that we had for the time being. So we did see that bounce off our 50-day moving average. Now for the short term, I think you're going to see some retail investors get excited that we drop down into the 27,000 area, and you're going to see a little bit of a bounce. I think we possibly will even retest as high as that $30,000 level. I think that's definitely within the cards. If we look down here at the stochastic, let me pull this up so you can get a better view. We've been down in this underbought territory for some time now. When you think about your stochastic RSI, this is like your strength indicator. We have been down in this area. You're more or less rebuilding your strength for another push. And, so we're down in the area that we need to be able to push to the upside. I just don't think it's going to be a strong enough push to be able to do anything major or substantial. Possibly retesting the $30,000 level, but ultimately, I do feel that we're going to be retesting initially our $25,000 level first. And then once we get a little bit closer towards that $25,000 level, we'll be able to reevaluate our position at that time to see if this is a pullback that I think it could possibly be, which is a sizable pullback, or if it's just, your every old day, 20-30% Bitcoin pullback that scares the living bejesus out of everybody. We've already seen a 10% pullback so far. So, a 20-30% pullback really isn't even that much. Now, before we move on, I do just want to touch on one more thing. We do have these support zones that are in these green highlighted boxes. This first one that we've talked about starts at about 25,000. This next one down starts at about 23,500. And the next one beneath that starts at about 20,750. So those are our support zones that we've got labeled out. Now we also have what's called your fair value gaps. Now what a fair value gap is the open orders left behind when you have uneven buying pressure. So as an example, during this blast off that we had during this time here, you can see that where I'm pointing at here. So during this time we had huge buying pressure, clearly by the immense move towards the upside. So as those buy orders get filled, there's just not enough sell orders available to fill all the buy orders. That's why you see such huge movements all at once. That's because you have so much more buying pressure than selling pressure. So what happens when you have those uneven amounts of buying pressure and selling pressure, and this can work in the opposite way as well. I'm personally just talking about it to the upside right now. However, this can happen both ways. So when this happens, you have all these orders that are unfulfilled down here, and what those are called are your fair value gaps. And typically, not all the time, but most of the time, the market seems to always come back and fill in these fair value gaps. And you can see like right here, we had a fair value gap. Let me grab this here. You can see right here we had a fair value gap and that got filled. Back here we had a fair value gap to the downside that ended up getting filled. And you can see throughout time when these happen, this one ended up getting filled, and this time over here, over and over again, these fair value gaps get left, but then the market ends up coming back to fill those. And the reason for that is because a lot of times the reason fair value gaps are initiated in the first place is because you have huge, large orders that are put in bulk. So those are your big players. Those are, your whales and institution type players. So the reason these get left there, well, more so, the reason these get filled eventually is because of the fact that these orders are typically left from bigger players like whales and institutional buyers. You have to ask yourself, if they were trying to buy down here at around $20,000, do you think that they'd still want to be buying up here around $30,000? Or do you think that they have enough buying pressure, selling pressure, and market manipulation in order to be able to help bring this back down to where they can get, some of these orders filled that they initially wanted? So, that's something that you need to ask yourself. I'm not going to answer that kind of a question for you. Now, if you jump out onto the weekly time frame, let me just get this zoomed in here a little bit better for us so we can see that better on the weekly. Now, on the weekly time frame, you can see we've actually got fair value gaps going all the way down here, down to that $17,000 level. Now that $17,000 level, when you're zoomed out looking at the weekly view like this, you can see on the volume indicator, that point of control line lines up just about perfectly with that fair value gap as well. Now, personally, I think we will eventually see even lower prices than we have seen so far at that $15,500 level, but that's just my view. If you came here for financial advice, you came to the wrong place because we don't offer that here. We're going to jump over to the Genie range report in just a moment, but before doing that, last thing I do want to touch on to talk about the price volatility of Bitcoin is the Bitcoin dominance. We've been talking about the dominance here on Be Crypto Savvy for a while and expecting this. Just do remember that we are still in this rejection zone. We haven't been kicked out yet. And when we do get kicked out, if that is in fact what happens and what we would expect to happen based off from, history, the price of Bitcoin would most likely see a pullback as well as the dominance. Now, jumping into the Genie range report. Now, as we jump into the Genie range report, if you by chance do not know what the range report is, up in the top right corner, there will be a video that explains everything you need to know about the report, as well as how to get your 2-week free trial, as well as 10% off the already low price of only $20 per month thereafter. And don't forget, when you take advantage of that link in the description, you are grandfathered into that price point through November, and that even includes all the updates that are coming down the road very shortly, actually, from the team over at Genie.io. They are adding in a bunch of new tokens outside of just Bitcoin and Ethereum, as well as a bunch of new indicators that are added into the report and exchange rating. And what I'm most excited for is right now this report gets updated every 24 hours. The team over at Genie.io are working on a fast twitch version that would update every 6 hours. So really awesome things to look forward to down the road. Let's jump into the report itself. News and events, there are a couple new ones here. Bitcoin traders call for calm as Bitcoin price slips 10% in a week. Could Bitcoin be part of the 120 trillion mutual fund industry? Here are 6 new projects looking to mitigate Bitcoin's mining, and Ether erases all gains from Shanghai rally as Bitcoin and crypto prices also fall. Bitcoin is showing $27,609 on the ticker at the time of recording. Looking at the volatility forecast, opportunity zone, and relative value, you can see it looks like pretty much over the next 7 days we can expect a pretty decent pullback, a possible uptick here on the weekend, which would be out of the norm, but possibly supporting what I was talking about as far as seeing retail getting excited about these low prices and seeing a little bit of volatility boost and price surge. But overall, it does look like possibly a bearish week ahead of us. We're not going to spend time on the candles as we were just in TradingView. Bitcoin's hourly RSI is in that underbought territory, fluttering around that 30 line. That does show possibility for movement to the upside in the short term. Over on the daily RSI over the course of 30 days, we are seeing that huge pullback like we've been talking about for about a week now that we really needed to see in order to be able to make any kind of, big push in the future. So we still need to see that pull down at or below that 30 line over on this one as well. Looking at the MACD over 30 days, we did end up seeing that bearish cross that we were anticipating, and we are pulling a nosedive to the downside, which is a good indication to reset. Over on the stochastic, after we had talked about that bearish cross that we saw above the 80 line, we have seen the pullback that we were anticipating. We are now below the 20, which is in that underbought territory as well. And I would anticipate within the next 24 to 48 hours that this flips and we see a bullish cross to the upside as we start seeing that move in price action. Bitcoin's average price, if you hover over that, you can get rid of those candles, and you can see we are pulling down hard as well. Bitcoin's on balance volume is seeing that nosedive that we were talking about needing to see as well. Now, if you could zoom out farther than just the 30 days, you could see that we actually had been stacking up for a lot longer than just the 30 days. So as this is a good indication of sell pressure, there is still a lot more out there which indicates more sell pressure than buy pressure. Over on the directional movement index, you can see that our trend has been losing steam. We have slowed down and dropped down to 32. Over on the ultimate oscillator, we are still pulling down into that nosedive around 38 today, sliding down to our parabolic stop and reversal. We have gotten our 5th straight sell dot printed above our candles. That is a strong confirmation of a sell signal. Fibonacci retracement is still playing out. Candles with Hikaki. The last strong confirmation we got was the bear signal. We have gotten an unconfirmed bull signal that is, like I said, unconfirmed was the last actual signal we got from Hikaki. Over on the Bitcoin Kopot curve, we are going back down towards that zero line. If you remember back in this area here, I said typically when you're chopping around that zero line, you won't be able to expect a huge swing to the upside. And I had mentioned, probably seeing something about the size of this pop up. So that looks like that could end up playing out. And if we jump down to the historical, you can still see we are shooting at a 91% accuracy on Bitcoin. And we are going to cut the video there. Make sure you enjoy your weekend till its fullest, and catch us here at Be Crypto Savvy on our next video. We'll see you then.